Hello, everybody, and welcome to the first live market outlook for the year. Happy New Year. So it's the 7th of January. We do these normally every Friday throughout the month, and it's a quick catch-up with what's been happening in markets over the week gone. Quick look ahead to what to look out for next week, the major financial announcements, and of course, I go through all the major markets, stock market indices, FX, some commodities, oil, gold, silver, all the usual stuff. And then if you have any questions or stuff that you'd like to look at, if you put it in the chat, then we'll take a look at those when we've done the major markets. Before we get into it all, let's just go through the risk warning for the sake of good order. So this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones and Capital.com accept no responsibility for any use that may be made of these comments today and for any consequences that result. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 76.25% of retail investor accounts lose money when spread betting and or trading CFDs with this provider. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing your money. Okay, a quick look at the stuff for next week. Wednesday is a big day next week. We're coming into 2022 with inflation is the topic, the concern for markets. Through much of last year, the US Federal Reserve was saying that inflation, we don't need to worry, it's going to be transitory, it's not going to be around for long, blah, blah, blah. And then, was it November or December, they said we're dropping the word transitory. So we're a bit more worried about inflation than maybe we would be. Earlier this week, we saw the biggest fall in the Nasdaq index on Wednesday of this week since February 2021. That was following the minutes from the last meeting of the Federal Reserve, where they said that rates might have to rise quicker than they were expecting. So inflation is the topic. Next Wednesday, we've got China inflation and US inflation data out. So expect fireworks, I think, potentially on Wednesday of next week. Big day. And then on Friday of next week, we've got UK GDP. So how well or not is the UK economy doing? And of course, we'll be back on next Friday, to do the live stream. We've had the non-farm payrolls out today. Bit of a surprise there as well. So US unemployment numbers come out on the first Friday, usually, of the month. The market was expecting 400,000 jobs to have been added in the US economy in December, isn't it? And that number that came out an hour ago showed that 199,000 jobs had been added. So that was a much worse number than expected. So we have seen some stock market volatility ahead of the open. Clearly, US markets are just opening now. So that's that. We'll get into the markets in a second. To find out more about Capital.com, obviously this is... you're watching this on our YouTube channel, but go to Capital.com to open an account, download the app, open a demo account, all that sort of stuff. Any questions after this, drop me an email. My email address is david.jones@capital.com. You can follow me on Twitter. I'm at JonesTheMarkets on Twitter. My New Year's resolution is to tweet more. To find out more about me and the training course I run, go to jonesthemarkets.com. And of course, follow Capital.com on YouTube, Twitter, and Facebook. Right, that is all of that done. So let's get into it. Let's get into the markets for today. We really need to remove the little Santa hat, I think, from the logo. So I also want to do that. Let's start things off. Let's start things off with the US stock market, the S&P 500. So the broad US stock market index. This is the trend for the S&P going back to the March 2020 lows. Of course, stock markets fell off a cliff late Feb, early March 2020. as concerns about the coronavirus pandemic really started to spread. And then since then, we've been going up. Last year, the S&P was up by around 25% or so, something like that. I think it's a difficult one to call coming into this year, because the immediate concern is inflation. And I think investors have probably, or it's only injected more volatility into stock markets in the last 6 weeks, inflation. But if you just, there's the trend. The trend is still up. So for me, from my point of view, from a trading point of view, I'm still looking to buy dips in stock markets. But I think, volatility has definitely picked up. You can see it here, the far right of the chart. I think arguably from September into where we are now, we did have fairly steady, plodding higher markets and dips for a few days or a week, and then off it went again. Volatility's definitely picked up, you can see in the last bit of the chart here. But to just zoom things in, this was the move on Wednesday of this week on the release of the Fed minutes. But I do wonder if it's a buy. If we've seen again some volatility over the payrolls today, not surprising. Let's bring up what the market was doing. There's the payrolls announcement. So just before the payrolls were announced, the S&P was at 4,700, trades up to 4,710, trades down to 4,680. So quite a bit of volatility over that. And if I was trading that today, the levels I would be watching, these lows over the last couple of days, really, we've seen the market, well supported short term by 4670 to 4680. Let's see what happens. I think if we see those levels broken today, we could see perhaps a deeper sell-off, and it puts us on a bit of a negative footing going into next week. We'll see what happens. But if in, let's say, the first hour of trading, if we see these levels hold, I think it's interesting to look at maybe a buying opportunity for a bounce into next week. So I think we're in for an interesting day either way in US stock markets, but that big trend is still up. We always look at the big trends on these live streams. I'd only start to worry if the market starts slipping below that December low around 4,500, then perhaps we're seeing 2022 start off on a much more negative footing. But let's see what happens. Let's take a look at the Nasdaq. The Nasdaq has lagged a bit in recent months. Yeah, I suppose we could say months, because the S&P 500, we had that big fall on Wednesday this week, but on Tuesday this week it hit all-time highs again. The Nasdaq, we haven't seen all-time highs on the Nasdaq since the end of November. There's our big trend on the Nasdaq. So the Nasdaq is bang on that trend line. So again, for me, it's an interesting one to watch going into this afternoon for the Nasdaq. We've had these lows going back now to the beginning of December, 15,500 on the Nasdaq. At the moment, the Nasdaq's trading at 15,700. So I think, again, it will be interesting to see what happens if the Nasdaq starts slipping below 15,500. Is that trend starting to be in trouble? Are we starting off on a much more pessimistic tone for 2022 than we saw through much of 2021? So I think it's all quite difficult to call at the start of this year, because this inflation thing is becoming a real concern. Are the markets overreacting? Let's see. But a bit of some key levels to watch, I think, for these stock markets going into this year. Let's take a look at some of the other stock markets quickly. We'll look at the Footsie. Ftse again, it didn't hit all-time highs, but it traded up. Again, it was Wednesday of this week, up above 7,500, best levels since February 2020. So almost a 2-year high for the Footsie this week. The trend is pretty clear on the Footsie. Again, if we saw a sell-off, we've still got lots of support from 6,800 to 7,000. It is going to be led by the what happens in US markets, but a strong start to the year by the Footsie, and then a bit more volatile over the last couple of days because of what we're seeing with US markets. The DAX didn't quite, this is a German market, didn't quite get up to fresh all-time highs beginning of this week. it's been a funny one, the DAX. You could almost say, broadly speaking, since April, it's all been a bit sideways. The DAX, it did scrape out to all-time highs in November, but fairly choppy, the DAX. So not the same sort of momentum in the second half of 2021 that we had in the US markets. So again, clearly just going to be led by what happens in the US, I think, the DAX. And finally, the Nikkei. The Nikkei, I mean, if you look at the Nikkei versus the US market last year, the Nikkei was just incredibly boring from about February. So just really sideways, this massive sideways range. It started 2021, really strong, carrying on that bounce that we saw for all stock markets from the March 2020 lows. It almost doubled into the beginning of 2021 and then just went sideways. So pretty dull, the Nikkei. Loads of support down at sort of 26.8 to 27.2. Really struggles sort of when it pokes its nose above 30,400 and pretty much in the middle of the range at the moment. So it's not the most exciting market for me at the moment, the Nikkei. But for me, all eyes on US stocks today to see how they perform near these old lows from earlier in the week. See what happens. What should we do next? Let's, as we're on the topic of inflation, let's look at gold, because gold was, I think, a disappointing market last year. Oh, hang on. Why is it like that? There we go. Disappointing market last year, gold, if you're in it. Really boring market. I did, in my own trading, the grand sum of one trade on gold last year compared to, I don't know, probably 20 trade, 30 trades on the S&P because the S&P is a market that's trending. Gold, you can see, just sideways last year for gold and slightly down, actually, if you look at where it was. And I think the people who are fans of gold, who absolutely love gold, will hope that this is the year for gold because of inflation. Classically, traditionally, gold is seen as a hedge against inflation. So if inflation continues to be a problem, then the gold bugs will be hoping the price of gold has a bit of a lift. I'd have to say, to counter that argument, inflation is a concern. And what's the gold price doing? Not very much. If we go back to, we can see it getting ramped up a bit in November, but we've fallen back on gold. We're trading now where we were in February of last year, pretty much. Yeah. So if gold is going to suddenly come screaming out of the traps and start soaring away again, it's being pretty relaxed about it at the moment. So for me, it's still at the moment a dull market. I think it is one to watch in case things get a bit more interesting, but we're not seeing signs of that at the moment. But going back to the longer term trend for gold, the long term trend is up. When we do the regular videos on the channel where we look at gold, you often look at this long term trend, which goes back to August 2018. So we are, 2.5 years into that trend now. So for me, I'd still be a buyer on dips for gold. If we did see, let's say we saw it collapse to 1700, it looks like a great buy down there because of that trend is still up. In the short term, it still doesn't look that exciting to me, to be honest. Silver. Now, silver is another one. I think this was my worst market last year, silver. If I bought it, it would go down. If I sold it, it would go up. So I didn't do much in the last 6 months of the year for silver. But again, if we take the chart out, pretty sideways year overall for silver last year. You can see that. Where did we come into 2021? Sideways and down, really, for silver. So we came in around $26 an ounce, traded as low as $21.50, ended the year about 23 and a bit. It's interesting down here, silver, because this level has been, look at that, going back to, those are the September 2020 lows. So what's that, a year and a quarter lows. 21.50, 21.40 has underpinned the silver price. So it's, if you really want to be a buyer of silver, we're back to levels that have proved to be good support for this market over the last year and 3 months or so. So I think it's always interesting down here, silver. Another one where some people would make the case, well, if we're going to see inflation this year, perhaps precious metals like silver will do better. But once again, as with gold, we're not really seeing it happening at the moment. But let's see. I know it's a popular one on the channel. There are loads of conspiracy theories about the JP Morgan manipulation, alleged manipulation, although some traders were prosecuted and convicted a few years ago on silver. I don't worry too much about that stuff. It's just a market. Goes up, goes down. If it doesn't go up, if it doesn't move, I'm not going to buy it. I'd rather go and buy something that was moving. But I think it's interesting down here at these levels, but not the most interesting market in the world last year. And then finally, on the whole inflation thing, the dollar index. Now, I think I like the dollar index, I must admit, as a market to trade, because it's the US dollar against a basket of different currencies. And I remember doing on the live streams last year, coming into last year, 2021, thinking, is 2021 going to be the great dollar recovery? And I think one of the first trades I did last year on my own account was buying the dollar index. And I've got a couple of open positions still running in the dollar index. It did eventually do well. It just took about 6 months to make its mind up and get a bit of a move on. So in the end, we did see a strong second half of the year for the dollar index. You can see this level, this low it hit in January, absolute great setup in May of last year, where it came back, holds the lows, and off it goes and starts a trend. So for me, this is going to be almost the battle for inflation. So do we see people selling the dollar because they're concerned about inflation? Do we see the dollar gaining ground because interest rates are going up? If people get really worried about inflation and the state of the global economy, do we see the dollar being seen as a safe haven and getting pushed up? So I think it's going to be a fascinating market to watch. Like I say, I've still got in my own account a couple of open positions on the dollar index. It hasn't done much. If I zoom it in, not done much really in December, pretty sideways. The trend is still up for me on the dollar index from June of last year. So I'm happy to stay long and still be a buyer of dips of the dollar index. Pretty clear. We've got good support around about 95, 94.50, 95. Let's see what happens. But I think if you're watching inflation this year, I think watch the dollar index to see how it responds. And we have not seen much response over the last month, so we'll see how things turn out. So let's take a look at oil. We did an oil video yesterday on the channel. And I put an order in to buy that hasn't been filled. I'm trying to buy a dip in oil at the moment, but I did buy it for my own account this week, so I did at least catch some of the move. I bought on this spike down on Monday of this week, and it's another one that's clearly, it's an interesting one, oil. And I think, coming into this year for oil, if we take the trend off the lows from last year. I picked up on this in the oil video we did this week. Let's just get that off for now so we can focus on that. And I think, so question number one is the big trends in oil since the April lows. The moves we saw in late November and into December, is that trend over? Is that big trend over for oil? And we're not going to see these old highs at $85 taken out. And this rally here is just a dead cat bounce before the market sells off. So I think that's interesting. So again, I think if you were bearish on oil, if you were negative on oil, perhaps next week could be an opportunity to go short. If I was going short oil now, probably the closest I would want my stop, if I'm looking for a big swing down, I'd want my stop up above these highs. Because if the highs get taken out, then I'm probably wrong to be short. But for now, at least, I think for the short term, at least, the short-term trend is still up. If we pick up on these December lows, let's flip this over to an hourly chart. So this is what I was looking at. That's it. This was the trade I was looking at on the video that we put out the day before yesterday. So you can go and watch that on the channel after. The trend is up. We had this bit of sideways stuff going on late December into January, and it's picked up again. It's hit a new high for the trend today. So for me, I would still be, in the short term at least, a buyer of dips on oil. We've seen support this year already at $74. If we saw a deep, let's say we get a sell-off for oil next week back towards 76, for me, I view that as a buying opportunity. So I think in the short term, at least, I'm still long at the moment. I'm happy to stay with it and see if it squeezes a bit higher. I think if it gets knocked back next week, I still think we could see another push higher. But the bigger picture view is whether we're seeing perhaps the start of a trend change in oil. Let's see what happens. But in the short term, for me, it still looks strong in the short term. The trend is still up. And to wrap things up before we get into the questions, let's take a look at the cryptos. Oh dear, the poor crypto investors, the hodlers. If they're hodling Bitcoin, it's currently back to where it was in January of last year. Bitcoin. I mean, clearly loads of volatility over the last 12 months in crypto, but it's really weak at the moment. You know, we're still continuing this correction from 69,000 or thereabouts, and we're at 42 at the moment. So what's that? It's down 27,000. So it's down about almost 40%, 35% from the November highs. I don't know, you know, the bigger trend, you could argue, the big trend, if we go back to March 2020 lows, is still up, clearly massively accelerated away from that trend. I think it's an interesting one to watch next week. You know, on the way up, we saw, you know, sort of 40,000, 39,500 hold the price up. So next week, I'd be watching 36 to 40,000 on Bitcoin to see if we see some buyers come out, you know. But for now, for me, that trend is down. I think I've said this before about crypto, you know, I think it teaches people bad habits, crypto, because they get rewarded for sitting through the price halving and then going up again. There'll come a point where the price halves, doesn't go up again, and halves again, and halves again, perhaps. So I think I think lots of new investors to crypto are getting their fingers burnt, and who knows? But let's see what happens from here. I mean, I'd still be looking to buy a dip, but I want to see this trend end, to be honest. You know, I don't have the same devotion to crypto that perhaps some people do. It's just, for me, it's just a market. It's a market like any other. But clearly, you know, it's been a sizable decline since the November highs. So let's see what happens down at 36 to 40 next week. And if we start slipping below there, then I'll be targeting 30K again. You know, the levels, that big base we saw built from May into July for Bitcoin. So let's see what happens with that one. And Ethereum, we'll have a look at that. You know, same sort of picture, obviously, for Ethereum. What was the high? 4,800. It's 3,200 now, so it's dropped 30% or so from the highs. If you picked up on a trend for Ethereum, you know, that trend is still up. Again, I think it's an interesting one for next week. If we start, you know, pushing, we've got this support in September down at 2,800. Let's see what happens there. Let's see if we see the buyers come back in. So, you know, one to keep an eye on, some interesting levels to watch. But for me, going into next week, the interesting markets are stock markets. If you just flip it back to the S&P. There we go. Just to see, you know, the S&P trend is still up. Like I say, the levels I'm watching, perhaps that's going to be the first trade we do. The first trade of 2022 on a live stream, I'm going to buy the S&P. So we've seen so far these lows hold over the last couple of days or so. 46.70 is the level. Let's say I'm going to go 46.40 for a stop. So I give it a bit of room. 46.40 stop. And see if we get some sort of recovery next week. I normally risk, what do I normally risk? About 100 quid on these live streams. So let's go a bit crazy. Go and risk 140 quid. So I'm going to buy 3 S&P at 47.04. Stop at 46.50. So basically, I'm not expecting it to break out of this zone. I'm looking for it to start breaking up. Let's buy it. Let's buy the S&P. There we go. Bought 3 S&P at 47.05. Let's see how that works out. We did actually, I was looking, I think over the holidays, I think that we did this trade on Euro Yen on a live stream, 3rd of December, so a month ago. And we did it at 2:30. That's how I know it's at 3:30. So I know it's a live stream trade. And it was 400 quid risk, 100 quid risk, sorry, and it's up 500 quid. Done incredibly well, that Euro Yen trade. So let's hope the S&P does as well. Let's have a quick look at that Euro Yen trade. Why Why did that do so well? I mean, the yen has been very weak. If you look at dollar yen, we've seen some really explosive moves in dollar yen. So 3rd of December was the trade down here. So really, I suppose, looking at this old support, see if it could hold above the old support. And it messed around for a bit. And since the 20th of December, it's really got to move on. So that was the euro-yen trade. Should probably move the stop on that a bit closer. Where is it? 127.20. Yeah, definitely. Let's put it halfway. 131, 128. Oh, let's do 129.50. There we go. So we'll move the stop a little bit. There we go. And see how that goes. Right, so for me, stock markets are the markets to watch next week. A lot of uncertainty because of inflation and everything else. I think it's going to be a different year to last year, because last year we didn't come into the year with this big unknown hanging over us. Maybe inflation is being over exaggerated. Maybe we will see it go away or drift lower in a few months' time, and everything gets a bit more back to normal. But it's definitely a big unknown at the moment. Right, let's get into the questions. So any stuff you want looking at, just whack it up, and we'll take a look at it. TTWO. What is TTWO? Is it Take Two? I think we looked at those before, haven't we? Take Two. Oh, my charts are messing out. Interactive software. Okay. Interactive entertainment. Trend is up, isn't it? I think we've definitely looked at these before because the trend line is on them. So the trend is up. And we've got data here going back 5.5 years or so. The only question is, isn't it, with a trend like this, I mean, that trend line's coming in around $130. The stock at the moment is trading at 164. What do? If you're in it already, do you wait to see if it dips back and have a stop loss somewhere the other side of here? That would be a big move. But for me, it still looks like a buy. Arguably, it could be an aggressive buy today. We had these lows from early December at 160, and we saw a move from 160 up to 180. So I think it's an interesting one to watch, with this whole support level from September down at 145 to 160. Big support, nice big trend. So for me, the trend is still positive. It just depends on whether you've got a short or medium-term view on the stock. We looked at crude oil. We did a look at that. Tesla. Let's look at Tesla. Tesla, I think I did a couple of trades on Tesla last year. And again, in this account, the account I use for the videos. I mean, it's a great trend, Tesla. If we pick up on the trend from May of last year, we saw it, all-time highs in November of last year, up above 1,200. Sells off to 900, but holds above that trend, holds above that old trend. And it's popped back up just earlier this week to $1,200. So for me, it's still a buy the dips. The only question is, where would you put your stop loss? And for me, the absolute closest I would want my stop loss if I was a buyer now would be the other side of the 21st of December lows. They were at 885. So let's say you go 850 for a stop. You're a buyer at 1,075. You're going to have I would have a 20% stop. But it's a volatile stock, isn't it? It goes from 900 to 1,200. It's a 30% move in a few weeks. So with the more volatile stocks, you need to give them a bit more room to move around. So for me, it's still a buy the dip. And it's only if we started trading below that 885 level that I'd start to worry that trend is in trouble. But that trend still looks positive for me. Do you think the Nasdaq will underperform as inflation becomes a real concern for the Fed? Well, I think the Nasdaq is an interesting one because I was just reading something today. I think it was something like 30% of the stocks that make up, I think it's the Nasdaq composite maybe, 30% of them are at least 50% below their 52-week high. So even though the Nasdaq has been really strong up until November of last year, if you dig down a bit, That's not true for all the stocks that make up the Nasdaq. It is being led, and I think I've read this a few times in the last year, by the the Googles, the Microsofts, the Facebooks, whatever they're called this week, the Netflixes. It's a concentration of a relatively small group of big tech stocks that have done well, and it is perhaps distorting the performance of the index. So I don't, I think I don't know how inflation will impact tech stocks. I mean, traditionally, of course, people would turn to more value stocks, perhaps the sort of stocks that make up the Dow, if we're going to look at index comparisons. But it definitely wouldn't normally be considered good, the prospect of inflation for the more go-getting high-tech stocks. And, we have, I think, seen that translate in the moves we've seen in the Nasdaq over the last month, 6 weeks or so. We haven't seen it move out to fresh all-time highs. So we are seeing the Nasdaq lagging a bit, and yet it probably is the more vulnerable to inflation. So let's see. Anyone interested in ARK ETFs? Yeah, that was a real. Kathy Wood is, of course, the lady who set up ARK, and they were a real darling, the ARK ETFs, up until about, I think, February last year. And you can see the underperformance. I think one of their biggest holdings is Tesla. There are lots of other high-tech companies, and she says she's got, a multi-year view. You shouldn't view it short-term, But if you'd have put your money in ARK, the innovation ETF, at the end of 2020, you'd been a buyer at 126, and it ended the year at 94. So you've lost 20% in a year when the S&P went up 25%. So it is interesting, but for me it still looks weak. Just yesterday, the innovation ETF traded back to its worst levels since September 2020. So it's one I do have in my own watch list, just to keep an eye on how it's doing. But for me, the trend for that is still down. So it is one I keep an eye on, but it still looks a bit weak. And it'd be interesting to see what happens, wouldn't it? If we do get more pressure on tech stocks this year, how some of these high-performing innovation ETFs or high-tech ETFs do. Which brings me to another one quickly, IPOs. Robinhood Markets came to the market last year. Really popular on Reddit and with plenty of other US investors. The app, the online brokerage app. So IPO'd last year, first day of trading, we've got it here, or first day we covered it anyway, July 29th. Trades at $34, trades up to $85 the same week, and now it's 16. So it's 50% lower than where it started trading on IPO day. So I think it was really interesting how badly that's done since it IPO'd just in the summer of last year, and still looks pretty weak, Robinhood Markets. So I just thought I'd go off on a bit of a tangent there. Platinum, someone's asked for. Let's take a look at platinum. Oh, Singapore dollar, Japanese yen. Let me have a quick look at that. I don't know if we even cover that. Yes, we do. I don't think I've ever looked at that, but Singapore dollar, Japanese yen. Then we'll look at platinum. So the trend is up, isn't it? It's an interesting one up here. It is interesting, this one, actually. Thanks for pointing it out. So if we say, historically, we are at historically problem levels for the Singapore dollar, Japanese yen, going back 4 years. So 4 years ago, it ran out of steam at around about 86. So I think it's an interesting one up here. But the trend is still up. Okay, so what would you do? So for me, if I didn't have a position, and I don't because I've never looked at it before, personally I'd do nothing at the moment. But if it starts breaking through 86, it looks like a breakout, looks like a chart breakout, and looks like that trend's going to continue. So I think it is an interesting one to watch up here. If you really wanted to go short, Singapore dollar, Japanese yen, perfect place to go short. Because for me, again, if I went short to where it is now, 85.20, my stop loss would be somewhere above 86. So actually, for a market I've never looked at before, that's an interesting one to come back to. So if you're around in a couple of weeks, let's take a look at it in a couple of weeks again. But that 80, it's all about the 86, I think, for Singapore dollar, Japanese yen. So a really interesting level up here. See what happens. Platinum. Let's look at platinum. it's been a good market for me in the past, and it's a bit of a, I would say, in my own account, I've got a long trade on platinum, and my bet is, and we'll see exactly how it turns out, this downtrend for platinum last year, from May of last year, hit a low in September, rallied, went out to a higher high, come back, tested it and held. So for me, I'd be a buyer of platinum, seeing if, is this a trend reversal? And I would have my stop, let's just get rid of that line for a second. I'd have my stop the other side of 890. So I think it's an interesting market for the rest of this year. Is this going to be the year of the great platinum comeback? Let's see what happens. But for me, 890 is the level. If it breaks below 890, the risk is that off it goes again. But we have had, over the last couple of years, some interesting trends in platinum. And I wonder, is it trying to build a base down here? Let's see what happens. But an interesting one to keep an eye on this year, I think. Platinum. Hi, David. Do you use the 20 moving average to help make a trade, or do you just look for pullbacks and set a price you're happy to take? Yep, I don't look at moving averages at all. So for me, how I do my own trading is pretty much a bit slower than I do it in these live streams because we've got a lot to get through. But trend, support, resistance, that's it. But the last trade I did for myself this week was coffee. So I bought coffee this week. Great market for me. Oh, look at that today. That was a bit of a fluke, actually. But a great market last year, coffee. I mentioned it a couple of times on the live streams. Because look at that trend in coffee last year. So we came into last year, coffee was $1.25 at the end of 2020. And it touched $2.50 last year. So for me, I'm a buyer of pullbacks. And I bought there a couple of days ago at that level there. Because I thought, and my stop is, I have wide stops in my own trading. I've got no interest in doing really tight stops. So for me, just buying the trend, and I don't for my own trading, I don't look at oscillators or moving averages or Fibonacci or any of that rubbish. I just focus on the price. I'm very much a price action trader. But if you go to my website, you'll see a bit more about that sort of stuff. Right, so no, I don't use moving averages. We looked at crude oil. If the Evergrande default unleashes the knock-on effect this year and we get a dump on risk assets and with the Fed raising rates, what will happen to the dollar index? If that was to happen, and I wonder, because I've seen some Evergrande stories. Evergrande, of course, is the Chinese property giant. There's their chart, not pretty. I've seen some Evergrande stories in the FT over the last few days, and I must admit I haven't read them. I think the market seems to be not too bothered about Evergrande at the moment. We had all that excitement last year, at various points last year at Evergrande. But if we did see, some sort of catastrophic financial event because of it, then yes, I would expect the dollar index to go up. I think the dollar has become something of a safe haven. We saw it at the start of the coronavirus pandemic. Everything got dumped but the dollar. So that's another reason to keep an eye on the dollar index. Polymetal. Don't know what Polymetal is, but let's take a look. Polymetal International. What do they do? Let's have a quick look. Cyprus-based precious metals mining. Okay, interesting. Again, I'm guessing because the price of precious metals has been sliding, it's not been the greatest of investments, has it? I suppose, for me, it's one I'd have no interest in because it doesn't look like it's setting up to be a trade yet. But if you really wanted to do a buy, for example, it's a low risk in terms of your financial risk. It could be a buyer at 12.48, but I would have a stop loss the other side of 11.98, the low from early October. So it's an interesting one. I suppose you could argue at a push that this bit of the trend has ended with the strength we saw in November. So, that could make it interesting to somebody. It's not one for me, but if I was a buyer now, I'd have a stop the other side of these lows. And if it broke those lows, I think that the risk is it's just going to carry on drifting lower. What's your take on gold? We did that. Plug Power might be a good buy these days. Plug Power is something to do with electric cars, isn't it? I did buy actually some shares in an EV charging company this week, purely for emotional reasons, because they're the only ones I go to that actually work. So I thought, let's see what happens. Plug Power provides hydrogen fuel cell turnkey solutions for electric mobility and blah, 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 blah. Oh, I remember those. We've done a few videos on those before, actually. Again, yeah, I suppose if you want to have a bit of a bottom fishing sort of trade and see if it gets a move on from here. You know, we've seen the sort of $23 level. 20 to 23 has been good support for Plug Power. So I suppose it is an interesting one down here if you thought that it's had a big old sell-off, hasn't it? It's pretty much halved since November. So I suppose it is an interesting one if you thought we were going to get some sort of recovery down here. It could be one I could be tempted by. You never know. Because again, we had the big downtrend off the January highs. It was $75 in January, all the way down to 20, bumbling around. It is a bit bumbling, isn't it? But good support coming in. So it's an interesting one to keep an eye on, I think, Plug Power. So yeah. Can we have a look at Alibaba? Yeah, I'm going to say now, I think the big trend is still down. I have seen they've had some big moves, but for me, I'd still be looking to go short. I mean, that has been a great downtrend since October 2020. It's a really popular stock with clients. Don't know why, but it is. If I go and have a look at, we'll come back to it in a sec, most traded. There you go. So shares most traded, Tesla most traded. I can't believe people are still trading these meme stocks, but whatever. And there's Alibaba. So it's the 5th most popular traded shares. So let's have a look at, there we go. There's Alibaba. Is it Alibaba? Yeah, it is, isn't it? So there's the trend. So for me, that trend is still down, and I'd be looking to sell short. I'd wait for it to run out of steam first. For me, it's got to break through. I would pick the November highs at 172 to signal that downtrend is over. Let's see what happens. But a lovely downtrend over more than 12 months now, and every time we've seen a rally, it's just run out of steam. So for me, I wouldn't assume it was any different this time around. But let's see what happens. We looked at Plug Power. I didn't look at the pound and the euro. I forgot those. Let's look at the euro. I've got a trade on the pound at the moment, actually. I did it yesterday. Euro trend is still down. And I think I said on previous live streams, I'm really surprised how much it slid last year, the euro against the dollar. I did think we'd have seen something of a turnaround for the euro, but we didn't. It's been a bit sideways over the last 5 weeks, 6 weeks or so. Perhaps we'll see a euro comeback this year. I think it's been a bit too boring to say too much about it at the moment. If it starts breaking above 114, then perhaps we're going to see a euro comeback. Personally, I probably won't trade it for at least a month or two until it tries to sort itself out and makes its mind up. Is it still in a downtrend? For now, it's still in that downtrend that's been in place since May of this year. So let's see what happens. I mean, on the way up in 2020, 112, was good support for the euro. So maybe this is where it starts to make a base, but I'm quite happy just to watch it and see if it makes its mind up. Now, pound against dollar, I'm actually long the pound against the dollar. I bought it yesterday. But I do think, and I'm happy to stick with it for now, but I am thinking about going short next week. So the short-term trade for me was basically going with the trend. There we go. That's been the trend over the last couple of weeks now for the pound. And I bought the dip yesterday, and it's done all right so far. So in the short term, perhaps it's got a bit further to go. But I am thinking when I come out of that trade, whenever that is, I think about going short next week because the trend, like the euro, the trend for the pound has been down since May, end of May last year. And we've seen a bounce, but ultimately these bounces have run out of steam. So I'm just waiting for the bit of weakness to start coming back in, and I'll be looking to go short. So I think it's interesting. It's also very overbought for fans of the old squiggles, the RSIs, overbought. So I think it's an interesting market to watch next week, the pound. Really good run over the last couple of weeks, but I do wonder, is the old weakness going to start coming back in? So it's another interesting one to watch next week. New Zealand dollar, US dollar. I think I remember doing a good trade on that in October, November last year. I think I went short. That was it, around here somewhere, and it fell off a cliff, which was pretty good. I think it's a difficult one at the moment because it's all got a bit messy from a trend point of view. So what would you do? I don't know. I suppose an aggressive short-term trade would be to be a buyer. So be a buyer. We saw this 67 level hold quite well in mid-December. It overshot the old lows, but it's trying to recover back in. So I think for me, if I absolutely had to do a trade, I would be a buyer and I'd put a stop the other side of 67. But for me, it's a bit messy, that trend at the moment on New Zealand dollar, US dollar. Adobe, the famous PDF maker, as I know them. I'm sure they do lots of other things, not just PDFs. Oh, wow, look at that. Broken out the trend, isn't it? That's interesting, that. I remember looking at those last year, Adobe. So we had this great trend from March of 2020, like everything. And it's interesting, it's fallen out of that trend. So for me, mate, are we seeing the change? People aren't going to be doing PDFs anymore. Maybe that's why. But it still looks pretty weak. I could be tempted to have one last go at buying, but I'd want my stop the other side of these lows from May of last year. But that's quite the big break in Adobe, isn't it? I wonder if it had poor earnings or something. But it still looks pretty weak to me, but I'd be quite tempted to come back to it over the next couple of weeks if it shows signs of stabilising down here and see what happens. But definitely quite the big change in that trend. Natural gas. What a great market natural gas was last year. Although not for a lot of our clients who were going short all the time, natural gas. But it was a great market from a trend point of view. Absolutely nuts. And of course, we're all paying the price now. Well, we are here in the UK anyway, with crazy gas prices for home heating. But it really took off in April of last year. Went from 2.5, 250, touched 650 in October, and it's come off a lot since then. I must admit, I'm tempted to be a buyer of natural gas down here, to be honest. But it's a bit sideways, and I feel like it needs to get a bit more momentum before I think about buying. But it is interesting down here. It's still in that trend, isn't it? It's in that trend, so it's an interesting one to watch down here. So I'd still rather be a buyer than a seller, but it's just gone a bit dull over the last month or so. I've just seen something about GameStop. GameStop's had a bit of a move. Oh, but it's just boring, isn't it? I think the whole GameStop thing is gone. A bit of a move yesterday, maybe. Just sideways and boring. Okay, nothing exciting in there. We looked at natural gas. Dollar yen and euro dollar. We looked at euro dollar. Let's take a look at dollar yen. I mean, dollar yen is very much a dollar indexy type thing, isn't it? But I'd still be a buyer on dips on dollar yen. That great trend going back to beginning of last year now, dollar yen. So how high is it compared to where it has been? Big resistance up at 119, 118, 119. I would still be a buyer of dips on dollar yen, but probably not today. If we get a sell-off over the next couple of weeks back towards 114, 113, it looks good to me. It looks like an interesting trade, but perhaps it's a bit overstretched at the moment. It's had a big run, isn't it, from December, dollar yen. So for me, it is one I watch during the day. I'd be a buyer on weakness, but I'd rather be a buyer a bit lower down at the moment on dollar yen. So Rivian, is that Rivian, R-I-V-N, the electric car company, who yesterday or this week has traded below its IPO price. I was actually watching one of the videos yesterday of their electric pickup thing that they do, which does look quite futuristic, but below the IPO price. It's for me. I wouldn't touch it at the moment because it's still weak. We don't have that much data. We only came to the market in November, so if we flip it on the hourlies, there we go. Trend looks pretty weak. Again for me, I want to buy something that's trending up. I don't want to try and be, the smart arse who picks the absolute bottom of something that's been falling for 2 months now. I want the thing to turn around, but it's not, is it? So it needs to, for me, it just needs to turn that trend round. Still looks pretty weak to me. On the subject of cars, Aston Martin, I think is one we looked at in the past. They came out with a profit warning today, but their share price hasn't gone down. And I think clearly it wasn't a surprise. But I mean, they've done pretty badly, over the year or so. Well, since they came to the market, they've done really badly. But Aston Martin, on the subject of cars, so maybe the bad news is all getting factored into the price. But it was a year ago, it was £22, is that, or pence, whatever it is, and it's 14 now. So tough old time for some of these car manufacturers. Would you enter a trade if it's at a new high? Absolutely. I did that. A big chunk of my profits in 2019 came from palladium, which is not doing so well at the moment. Palladium was an absolute great market on the way up, and this was making new highs and just bang, 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 bang. Tesla is another good example, clearly from history. Bitcoin, you could say as well. There you go, Tesla, new highs. I think as long as you can figure the risk out, it makes sense. Of course, the reality is most people don't like buying at new highs. And let's not forget, most people lose money. I haven't said that yet in 2022. Most people lose money because they do the wrong thing. They'll buy something that's making new lows and not buy something that's making new highs. So yeah, I'd have absolutely no hesitation as long as I had a sensible place for a stop and everything else in buying something that was making new highs. We looked at Rivian, Nordisk. What's Nordisk? I think we have looked at these before, haven't we? Nordisk. Headquartered in Denmark, employs approximately company pharmaceutical products. Okay, fair enough. I would be looking to be a buyer. For me, the trend is up. If we pick up on this trend from March 2020, accelerated away, blah, blah, blah. So for me, if I was a buyer today, I would put my stop loss the other side of the September, October lows, the other side of 95, something like that. So it's interesting. I mean, it's again, you might want to be a bit more patient and wait till we actually get some proper strength. But I think it's an interesting one down there. So that trend is still up, and whether 95 holds. And if it started to break 95, I'd be a bit more worried about it. But for now, that big trend is still up on Nordisk. LMND. What is LMND? LMND. Lemonade. There is a company called Lemonades. Various insurance products to customers in the US and Europe. Wow. Who knew? That looks horrible, doesn't it? If you have a look at the trend on Lemonade, there's the trend. So for me, well, just look for a bounce and see if it can go short again. It's done. It's been absolutely. It's a US listed company. So it was a year ago. It was $186, and today it's $38. Amazing. So amazingly bad. So for me, it's having a good day today. But let's not forget what the big trend is over all sorts of timeframes for that one. Big trend still looks down to me. GME, GameStop came out with an NFT platform announcement. Of course they did. I hope we've all bought our NFTs, our little pictures of monkeys. It'll be the big thing this year. Meme companies just spout meme bait to drive the stock. Yeah, but I wouldn't disagree with that. VOI. What's VOI? NFTs. That's where all the smart money's going this year. I've got absolutely no idea what NFTs are. My son and his mates, who are in their early 20s, buy them for like 5 cents and 10 cents and $5 in the hope that they're going to go to, I don't know, whatever, 1,000. I don't understand them. Did you mean the volatility index? If that's what VOI is, the volatility index, we look at this now and again, the VIX, and not surprisingly, the VIX has jumped up the last couple of days because of what's happening in the markets, because of the concerns about inflation after that Fed announcement. I often say I don't trade the VIX. I think it's an interesting thing to look at to see how much fear there is in the market. You know, this was in March 2020, of course, with the coronavirus. You know, it spikes up and then it settles down, and not surprisingly, has spiked up the last couple of days because of concerns about inflation. When would you move about your stop loss? I cover that on the training course that I run, but I think as a rule of thumb, there's a couple of rules of thumbs about stop losses. First of all, 60% of people don't use stop losses. I don't say this applies to all of them, but most of them, because they're in denial, because they're not using stop losses because they don't want to be wrong. Absolutely ridiculous. So you have to have a stop loss. But I'd also guess that most people who are adults and use stop losses probably place them too tight. I was having a conversation with someone just yesterday, actually, talking about the Nasdaq. And he was talking about placing a trade on the Nasdaq. And was thinking, you know, should I have a 50-point stop loss on the Nasdaq? And we were talking about it last night. And I said, no. Because we looked at the Nasdaq yesterday. Look at yesterday on the Nasdaq, right? This here is yesterday, yeah? That's a really boring day on the Nasdaq compared to what's gone on over the last few weeks. Yesterday, in a really boring day in the Nasdaq, the market went from 15.6 to 15.9. So the Nasdaq, moved 300 points in one day yesterday, doing nothing. So I think the second mistake people make is having their stop losses too tight. So you need to give the market time to move around. And the third rule is not to move them too early. So I want to see a really decent move before I move my stop loss, because the other big mistake people make is they snatch at profits. You know, the market, let's say the market goes up 100 points and then it drops back 10 points. They panic and take their profit. You know, you need to give trades time to work out. And this is why most people lose, because it is hard. It looks really easy, doesn't it? In hindsight, trading looks really easy. You look at that, that's the chart of the Nasdaq over the last 6-8 months, and you think, well, I'd have bought in here and I'd have ridden it all the way up here and made a load of money. The reality is people don't do that. So there's so much more to trading than where you buy or sell, you know, and the whole stop loss placement and stop loss management is really important. And I think most people are too eager to take profits or run losses. Big subject. Disney. Let's have a look at those. What time is it? We're going to have to start finishing up soon. Disney. It's interesting, Disney. That's why I thought, was it Adobe was interesting. Where, you know, when something falls out of its trend line, it doesn't necessarily mean the trend is over. And for me, it's always worth a second look. So we had this with Disney in November, falling out the trend line. It was a big old fall, 170 down to 140. So it lost $30, you know, 15, 16, 17%. Yeah, I would be tempted to be a buyer. If I was a buyer today, I'd have my stop loss below 140. So I take the view the market has overreacted. I mean, that was the better buy, obviously. Down around 148 when it comes back for a retest. I would be tempted to be a buyer. So it's an interesting spot, Disney. So falling out the trend line. Maybe it's going to have a little push back into the range before the fallout, up towards 180. Let's see. Let's see what happens. What's your take on sterling yen? I've got a trade on sterling yen at the moment, and it's my biggest winning trade at the moment, sterling yen. Great market last year, sterling yen, for the first half of last year. On the way up, 2021, bang, 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 bang. I put the trade on here in November, underwater for a lot of it, and it's woken up again over the last couple of weeks or so. I do feel like it needs to get a move on from here. If it can break 158 properly, perhaps we could see the next extension for sterling yen. I'm just a little bit worried that once again it's going to start to run out of steam up here. So I don't think it's been the greatest market to trade the last 6 to 8 months. It's interesting that 148 or thereabouts has been such a floor for sterling yen. So if I didn't have a trade on at the moment, I wouldn't be a buyer up here, personally. You know, if you thought it was going to run out of steam, it's a great level to go short with a stop the other side of 158. But if it breaks 158, it starts to look a bit more bullish. So I've got a trade on and I'm trailing a stop loss behind it. So we'll see what happens with sterling yen. But yeah, let's come back to it and see if it makes its mind up to go through. We did crude oil. We looked at crude oil. CrowdStrike was an old favourite from Nick. It's not Nick who's asking this time round, but let's have a look at CrowdStrike, which is from memory, they're security, aren't they, or something? Oh, they've really fallen out of the old trend, haven't they, CrowdStrike? They look pretty weak to me. So we had the fallout of the trend. Maybe I'd have been tempted to be a buyer here, looking for it to push back up, but it's pushed a bit lower. So for me, it looks a little bit weak, CrowdStrike. I think it's one worth coming back to because we have quite a bit of support from March of last year, around 167. So let's come back to it and see if it can hang on and turn around. But it looks a bit weak, quite a change to that trend over the last couple of months or so. And Lucid, we did look at Rivian. Let's look at Lucid. That's another electric car company. I like Lucid. I like their cars. I think they're really expensive. I think they're like $130,000 or something. But they're an electric car company again, and it's the guy. I think it's a British guy who used to be something big at Tesla. I think is the CEO of Lucid. Another one that came to the market last year. I would be a buyer now, not just because I like the cars. But I think it's interesting that this trend, it's only a short-term trend from September. So let's do it. Let's just do a trade on Lucid. So for me, where is it now? It's $40. Again, it needs to have a wide stop because it's volatile. I'd be tempted to buy it with a stop at 30. Let's put a stop at 30. Let's buy Lucid. What did I say? I need to give it a bit of wiggle room because it's a volatile stock. There we go. We'll buy 14 Lucid at 39.98. Stop at 30. So if it starts breaking down to here, get out of it. Let's see what Lucid can do. So, but you can see, a nice little trend there. Admittedly, a short-term trend. If we flip this to the hourlies, there's our little trend chugging away. Nice reversal off the trend just yesterday. Let's see what happens with those guys. And that's it. We looked at Robinhood, actually. I looked at Robinhood as well. I've just seen one come in for Robinhood. We're going to wrap things up there because it's been an hour. So don't forget to find out more about Capital.com. Go to Capital.com. Any questions, drop me an email, david.jones@capital.com. Twitter for me is @JonesTheMarkets. JonesTheMarkets.com to find out more about my trading approach. Follow Capital.com on YouTube, Twitter, and Facebook. That's it. It's the first one of the year. We'll see. A lot of uncertainty coming into this year because of inflation. We'll do it all again next week. Thanks for coming along. If you haven't subscribed to the channel, subscribe to the channel. And have a good weekend. Okay, thanks a lot. We'll end things there.